Okay, cool. We are live. Looks like, Brad, we got a couple people in the chat. So thanks, chat, for coming through this afternoon. Starting a little bit late today, but nonetheless, it is Wednesday. Happy Wednesday, happy hump day, whatever you want to call it. How's it going, man?
Doing good. Yeah, doing good. Been busy doing some marketing stuff this week, and uh, just trying to. I've got some interesting. Came across something interesting today that I'm going to send you.
Okay.
That we might want to use on a future show, at least just like a quick hit kind of information thing. But it was really interesting dealing with interest rates in the 80s when they were
Yeah.
17%, and what the interest rates are today. And it was a pretty interesting graph that showed the percentage of your income that was required to buy a house over like the last 50 years. And that was really eye opening to see. Yeah, the other account, Michael Baker.
What's
Um,
crazy? What's crazy too is like just if you to take out the last 50 years and you just kind of segment it to like the last like 10. So like not even counting the 2008 debacle, but like 2012, 2013 up until today. Income steadily grew, and real estate steadily grew just because I think with 2011 or 2010, whatnot. However, the ever since the pandemic, house prices just skyrocketed. It's a little too fast, obviously due to lower interest rates and I think more purchasing power and income for people as well. And you would think that the interest rate levels falling off would kind of hit real estate, and it kind of has, I think, over here a little bit. But I mean, I just quoted someone today, and that's the highest quote I've ever given in the past 5 years of working as a loan officer. So, kind of unfortunate for people that are trying to find a home. I would say though that current homeowners, like, you're definitely benefiting from that equity staying there. I don't think it's a full out crash like people are hoping or predicting, but it's definitely tougher if you're trying to buy a home, but the demand's still there. So,
right.
yeah.
So a lot of what we're doing now is just like educating ourselves, educating prospective buyers, prospective sellers, and just staying in front of this information. I mean, I've I don't know if I've ever had my finger on the pulse of what's going on more than I do right now, just as
Yeah.
far as checking it so often.
Yeah.
um
Right.
Last year we didn't have time to do that. It was so, within the last 2 years it was so busy that you didn't have time to sit down and kind of educate yourself about what was happening. It was just happening so fast, and you
Yeah.
just kind of like latch on, hang on, and just go for the ride. So it's been really interesting to see how it's going now.
Yeah. And I also believe it's, there's so much information out there, whether it be an hour and a half podcast like we're doing, or like a 2-minute TikTok, and I feel like the trend for people is I would rather watch a 2-minute TikTok and make a major financial decision about my life rather than not just saying hours, but like to really dig into the financial ramifications of 30 years versus like two. That's kind of like you kind of see the more popular, I guess, financial quote unquote advisors that have come out of the pandemic in the past like couple years are just, it's that quick podcast type stuff. And, a lot of it's nice because it's segmented, but I don't think it really gives an opportunity for people to ask questions of like, well, why is it that way? Or what affects, like, why is it interest rate at 3% in 2021, and why are they now 7% in 2023? It's more of a loaded question than like, oh, it's because inflation. There's so many other factors in that, and it's painful for, I think, for some people, and for some people that work in the industry like us. However, for the long term, the people that, I think it's going to really reward people that are in it for the long haul and not for the short term, just quick buck or what have you. So anyway, kind of a little bit tangent. We just went off there, but yeah. So some really crazy news that I saw on my end, and I'm really excited for what you're going to talk about, honestly, because it's such an interesting topic to think of and I think these are things that people like, oh, you just kind of like wonder about, but hearing it from the horse's mouth, like last week on your subject about solar panels and whatnot. I mean, I would have actually thought that solar panels would add some type of value just based on the potential, money cost savings when it comes to solar energy. And, one of those things that, you always need energy for a home. So, and I just didn't realize the startup cost for it, the amount of time it takes to actually earn the money back.
That was the thing that floored me. It was longer than the average time that people stay in a house.
Mm-hmm.
So that was really cool. If you missed it, definitely go back and check it out, because it was eye-opening for me. I wasn't an expert by any means, so I had to kind of dig in and learn. I knew some things, but to dig in and learn a little bit about what goes into doing that.
Mm-hmm.
And so don't feel the pressure of the salesmen that are the door-to-door salesmen who are selling solar panels. Do your research first.
Yeah, and I mean, I was just, it's almost like a rich person's way, or not, I would say rich person, but a well-to-do person's way of saving money. So it's like it seems like one of those save money things for like people that have a lot of money versus like it benefiting people that really are struggling with their bills in this inflationary period, So Michael says, after last week, I've noticed solar panels on more homes than I ever had before. It's kind of like buying that new car and then like everyone else has that car, that kind of thing. It's kind of funny. So yeah, good stuff, man. I'm going to send you some in the private chat. It's in both our Facebooks and YouTube. So let's see here. So to kind of the reason why of my slides today in particular is a very famous person. They actually made a movie about this guy, and I read the book. Michael Burry, he is you could say the grandfather of The Big Short. He was a doctor turned investor, and he invested like in the early late 90s, made pretty good dough, and ended up starting up his own hedge fund. And if you haven't seen The Big Short, it's a great movie. I believe who plays him? Christian Bale plays him in the movie, and he basically bets against the market. And he's been kind of followed on social medias. He kind of keeps it a pretty low profile, but when he does tweet something or say something about the market, everyone listens because he was right once in the biggest, crash of modern history, whatever you want to call it. And
he's a bit of a savant, isn't he? I mean, he's like,
time.
If that movie is accurate, I've watched that movie several times because it was so intriguing.
Yeah.
If it's accurate, I mean, very few people agreed with his approach.
Yeah. And he was losing paper money for like years. And it kind of what I think what we look at in comic books and what we look at in our own careers is like people are so short-sighted, and they're pulling money because the stock market over a 2-year period was basically destroying his paper profits, but he never sold the derivatives that he was buying. So he was just losing money on paper, but I don't know the exact return he had on his investors' money, but it was somewhere in the realm of like 436%, over a 1.5-year period of when he started buying these derivative contracts, basically betting against banks and mortgage companies. Well, he made a pretty big bet again, and it wasn't against a specific sector, but it was against a stock market quote unquote crash. I didn't really look into the actual like date of the puts that he bought or what exact options he bet against or what he bought, but the value of these options is around 866 million. If you kind of get into it, though, it's not, he didn't spend 866 million. It's more the rounds of the value of the trade if it's successful. Evidently, I'm not really sure, but the total amount of value that he bet against the market was 1.6 billion, which is pretty big. It makes sense to me that he made this trade just because of the way that if you look at the market in general as a whole, it's a little overvalued and it's a little ahead, in regards to like how financial instruments work, i.e. interest rates. And a lot of times, portfolio investors will hedge their bets, right? They've made a 30% return. They don't necessarily want to sell their position, but they want to protect themselves in case of a 5-10% kind of correction, if you will. And so kind of the question I had to myself is that trade he made, is that a correction trade or an actual like meltdown of the economy? I think it's really early to tell. This trade may take a year and a half or so, but as of right now, employment's really good. Delinquencies are at an all-time low in mortgages, which is really crazy to me. So it's people are well positioned to make their, to pay their bills and whatnot. So I think it's a little bit early to make the call that the market's going to flop and just turn over. Brad, obviously you've been really busy on the real estate side. I've been fairly busy on the financing side, but it's manageable levels. You know what I mean? There's still an appetite out there for people. I got 3 inquiries today of people want to buy a $700,000 home at 7%. And so there's curiosity out there. I don't know, man. What do you think of that, Michael Burry? Just with your knowledge of him as a trader in the movie, what do you think of that? Is it scary or is it kind of like, kind of?
It's for my level of knowledge, that sounds scary.
Mm-hmm.
And I probably have a layman's knowledge, the average person's knowledge of this stuff. Yeah. So yes, hearing that does it makes sense, but it also sounds a little frightening.
Yeah, I mean it's definitely, it made me think, man, maybe I should buy some puts to hedge against my portfolio, because I mean I'm not in the financial markets every day, but I see what I see. And I think a big thing when you're thinking about shorting a market or like saying that the economy is going to falter, there's some certain things you have to look at. Demand for housing, right? I mean, that's the barometer of what we talk about a lot of times. And it hasn't slowed down, in my opinion. There's people that necessarily can't afford a home, but they still want to buy and have the ability to buy a home. Another thing that I'm looking at, I just talked about, is delinquencies in mortgages. So, I mean, literally, 5 years ago, or 10 years ago, you couldn't really Google delinquency rates in mortgages. I don't really know, but you can now. So just some certain things to look out for if you're really wondering what kind of things to look out for and see if there's actual reality of the financial markets falling apart. And I think also what you want to see is a lack thereof of mergers and acquisitions and regional bank crises, that type of stuff. Bankrupt companies, bankrupt real estate companies, that type of thing. Actual companies failing. That's something that you want to kind of be on the lookout for. So, earlier this year we had the regional bank crisis, quote unquote, but that kind of got figured out. So until the next one, or until we see S&P 5,000 or 4,000, it's just kind of a wait and see kind of thing. But
we've really been riding a wave for so long, and that's the part that I could see where he's betting against it. I mean, it's just, you've had these, it's ebbs and flows, it dips and it goes up. Who knows, man? Who knows, Michael? It'll be interesting. But it seems like that way it's been on a gradual increase for a long time overall projection.
Yeah. And, it may not be a bad idea. I don't know Michael Burry's full portfolio, what he's investing in, but So I'd be worried if it was like, okay, according to Michael Burry, and I haven't read his portfolio, and he can put out as much in public as he wants to. He's not a publicly traded company. He can just kind of do this on his own. But let's say that his only trade was this. Yes, that would be scary because he's basically saying nothing else is worth investing in. But let's say you did invest in 2020 and you were one of the lucky ones that had a software programmer, type of job, and you had all this extra cash and you just invested it starting in June of 2020. You are up from S&P 500 3,000, 2,600 to 4,500. That's 100% increase in 3 years. And you don't necessarily want to take the tax gain from that 100% increase in your portfolio, but you still want to make money in this. You want to protect your chips, right? You don't have to play every hand, but you got to pay the dealer sometimes, right? So I kind of looked at, I had some questions from some people on like how to protect their portfolio. We already talked about kind of topics covered today. Sorry, I'm kind of going ahead here. We already talked about Michael Burry's super short, and that's kind of the overall kind of reason of my slides today. What stocks should you short? I will never recommend saying yes or no what stocks should you short, but I am giving kind of examples of indexes you could look into to protect your portfolio in different sectors. My credit tip of the day, kind of going back to protecting your current financial situation by protecting your credit. And then Brad's, the more you know, specifically swimming pools, which is really cool. I was really tempted to look at your slides today, but I said, nah.
I was going to ask you before we got into it if you did. I didn't look at yours either. So we're going into this for those watching. We're going into this completely fresh. We're seeing all this stuff for the first time. So
yeah, man. I really wanted to look at your slides when I was kind of posting up, and I did take a peek at the real estate highlight segment we had today, which I thought was really cool. I hope you like mine too. So let's get into it. So again, this isn't really a recommendation to short the market or to hedge your portfolio. I don't know where people are, from 2020, but I would say it's not a bad idea to either trim some of the fat from your investments, or if you're like, oh, man, I'm so really confident in S&P 500, 5,000, but that story about Michael Burry kind of scared me. I do want to protect my investment in a little bit more of an aggressive way versus just putting it in cash. You could take 10% of your portfolio and buy these 3 ETFs. So, Brad, do you know what an ETF is?
I do not.
Okay. ETF stands for an electronically traded fund. So basically what that means is like a mutual fund, for example. It's comprised of like bio, S&P, technology, what have you. And then you kind of buy whatever grocery list you want to buy into that sector, right? So this is like early 2000s, maybe mid 2000s. All of these money managers came up with these ETFs to basically sell a product for specific sectors for clientele. When I was working in financial advisory for a family practice, we bought a lot of ETFs for our clients because it was a small way to get into, or when I say small, you didn't have to like buy hundreds of shares of like Apple or like Boeing. You could literally just buy a technology ETF and get a bite out of every single one of those components. The difference is it traded more actively like a stock, but it didn't have but you weren't segmented to that one stock. So it was very attractive to investors that wanted to invest in a sector that was specific to whatever sector it was, whether it be semiconductors, bio, or the good old S&P 500. So some common ticker symbols of ETFs are SPY, which is S&P 500. There's triple Q, which is QQQ, which is for the NASDAQ. There's a lot. There's a lot of ETFs that you may or may not be familiar with, or you could familiarize yourself with. But these are ETFs that you could hedge against your portfolio that is up 120, 50% of the past 2 years. The only risk that these ETFs have is if the market continues to go up, the value of these ETFs will go down. However, it's a better, at this point, if you're buying now, when the market's kind of near all-time highs, you're not paying as much as the guy that bought these in 2020. So this is more of a suggestion piece versus recommendation piece. If you, again, and this is like the fourth time I've said it, if you're looking to hedge your portfolio against losses because you are afraid that the market is frothy, here are some suggestions of sectors that, or of ETFs you could buy to protect yourself against those specific sectors. Does that make sense?
Yeah.
Cool. Excuse me. And this is kind of what Michael Burry did. He's a little bit more sophisticated. He bought options, and I'm not going to do an option show. That's like a Discord type thing. But he bought contracts versus actual funds that trade until the fund is closed, which never happens with these deals. So the first one I picked was a biotech sector short ETF. Biotech has been on a tear the past few years. I mean, COVID kind of put a lot of focus on, Moderna, of course, and like Pfizer, and Biogen, or to name a few, just have been done really well. Novartis, by a relative that works for Novartis, they've the past few years, these biotech companies have gone up quite a bit. PE ratios are through the roof, all that stuff. So if you're worried that biotech's going to falter, or like you just want to hedge your position, this is an ETF you can buy. So simply, and I don't know how active you trade on like Scott Trade or E-Trade or any of those type of deals, but simply all you got to do is type in the ticker signal BIB. And if you have a very heavy, like 25-50% portfolio in biotech, you can buy this and protect your investment if you don't decide on selling it. Yeah, so it's not as an aggressive ETF. So there's some ETFs that are like ×2, ×3 short. What that means is if that particular sector goes down by 1 point, your ETF goes up by 3 or 2, depending on how much risk you want to put. This simply just goes up. If your sector goes down by 1, this ETF goes up by 1 as a whole. It's kind of what it. And there's always an inverse ETF to it. So I don't know what the inverse of any of these three are, but there's like a biotech ETF that you can buy that will go up if biotech goes up, stuff like that. So
that's interesting.
Yeah. And then I've been talking about NVIDIA and semiconductors a lot lately, just with the AI boom, which we were supposed to do this week. And I apologize, I forgot to bug you about AI stuff. So we'll kick the can down the road, but we'll get on AI for sure. But
well, as prepared as you always are, I know you want to really like dig deep. So we want to provide the fans with really accurate information.
Cool.
We just don't want to willy-nilly throw stuff out there and without having some real knowledge behind it. So I appreciate that we're not rushing it to the next week.
Cool. We might get way too many people in the chat too if we do AI. Who knows? I don't know.
We'll definitely let you guys know when we're the week we're going to hit it up.
Definitely. It's a really compelling sector too. It's what's fun about investing in stocks and kind of being in control of your own portfolio is that it's almost like comics, right? Someone talks about like a certain character in comics or like a sector, and you can do your research on that character or that company, and you learn more about the company, and it makes sense to you, all that good stuff. Why not make money in also? But yeah, this Invesco is the company that does this ETF. It's PHLX, and it's it's segmented towards semiconductors. I don't know if it's specific to AI, but regardless, semis are up huge, and semiconductors do really well when companies are looking to grow the company, right? So like obviously we just talked about AI. AI is a really big sector that companies really want to get into. I think Google they're working on some type of AI like program that will, what is it? It's basically like gives you advice on life, which is just so crazy to me. I mean,
I don't know if you saw in the Discord, the one that I shared, I guess it was this morning, but what was it? Oh, when you log in and you have to, they want to make sure you're not a robot. Make sure you're real, and you have to click the box. I'm a real person. And then it says like, select the boxes that have a stoplight or select a stadium.
Yeah, yes.
They said, so AI has become so advanced that now they're doing complex puzzles. Like instead of you picking the picture, AI is able to do that now. So they've had to make those questions more intense, a little bit harder. So it asks, like, it's a series of 3 questions instead of choose the picture. Choose a picture of a horse or whatever. And AI is getting smart enough that it can figure that stuff out now. So they're having to change that login verification.
That's the funniest thing I think because I cannot stand those freaking things.
And it does it at the most inopportune time as well. It's like, I was literally just on here. How did you not, how have you forgotten me already?
Yeah. I know. That's crazy, man. But like, that's like, now it's almost like forced growth. Like if you're a tech company and you have all this information and you have AI, I don't know. And this shows my knowledge about AI. It's like, you really have to protect your company. And so kind of going what I was going back. So I'm kind of going around about, but if semiconductors do well when tech companies are trying to grow the company, and it's really hard to grow your company when interest rates are at like double digits for a very highly rated loan. So you have to burn cash. Well, companies would rather get a 1%, 0.5%, credit line or loan versus burning cash, right? Because then it messes with future cash projections and all that. So that's why it's one sector that, like, it's so intriguing to me, where it's like companies are spending billions of dollars on semiconductors, even at rates as high as we have today. So something's got to give, in my opinion. So again, if you got into semiconductors when Nvidia was like at $100 in December, and now it's at near 450, I wouldn't mind picking up a couple at PHLX, keeping that Nvidia stock, where it's at, and not having to take that tax gain. So before I go into the last one, just think of like what we're trying to do for your portfolio. It's protecting not only your portfolio from going down and kind of getting that even keel. You could have $1 million portfolio and have a 4,000% gain on your portfolio. If you don't sell a share, you don't pay taxes. You only pay taxes when you get a gain off of your sale of stock or equities or what have you. So if you don't want to pay the tax, man, it's a good thing to always hedge your bet, or hedge your portfolio. Always hedge it either with cash, or in this case, 10% into a short ETF fund. Anyway, that's just something to think about. A little more advanced to protect your portfolio. I hope you guys are getting some enjoyment out of this topic here. It's kind of boring, but
yeah, it makes sense. But it's it's in light of what we're seeing, I think it's this is important stuff to consider. And that news was a little shocking. So I'm intrigued by this.
Cool. The last ETF is a Spider ETF. So sorry, Spider is S&P 500. It's a pretty simple one. This is just like if you are like, oh man, I think Michael Burry is like right, and my portfolio is up like, like Ferd was saying, it's up from 2,600 to 4,500 now. I want to put all my cash into the Spider ETF to protect my investment. This is the one to get. I think it's ticker symbol SH. It's an easy hedge against the market. It's basically short the S&P 500. Overall, I would say, and I said this last week and a couple weeks before, I could be totally wrong. I think equities have kind of overshot their shot right now. I was looking at Apple the other day, and it's at like it was 52-week high was 197. It's trading around 179. And there's a lot of reports coming out that the iPhone 14 battery life is really bad, and the potential upgrades to the iPhone 15 aren't going to be as like well received in past years. So how and the iPhone is the number one like product that Apple makes its money on. 49% margins on that phone each time they sell one, and it's the most popular phone in the world, evidently, right? So if Apple's number one, and I always think of an iPhone as like the number one barometer for how well the economy is doing, because it's kind of a luxury item. It's kind of like having a new car, that kind of thing. If the iPhone, which is the number one company in the world's number one product, so essentially the number one product in the world, you could make a case for it, is not really expecting to sell a lot of units, therefore pushing the price of Apple up. How is Apple going to get past 195, or how's it going to get to 200? And if you're not aware, Apple's very highly weighted in the S&P 500 and the Dow. So if Apple doesn't go up, neither does the S&P 500, along with a lot of other companies. So I guess my point is like we've had a lot of high growth the past couple of years, and we have really high interest rates, and we're so worried about inflation and all that, and they're cutting back on spending a little bit here. We're gonna have a couple quarters where, we're not going to be doing so well on the consumer side, and on top of that, the Fed today, if you're watching Sunset to South's Instagram videos that I do every day, the Fed is worried about inflation, and per the minutes that they said today, they may keep raising interest rates going forward. So it's just going to get more expensive. Anyway, so if you're worried about your portfolio and want to hedge against it, these are just a few ETFs you could look into buying outright and protecting your portfolio, all that good stuff. So anyway,
that was heavy. There's a lot of we have to sift through a lot of like really heavy news, and it's like try to make sense of a lot of really heavy news. Not that your presentation was heavy, but just like how to navigate everything. I mean, it's really the basis on which we started doing this in the first place was to, I think we had just mentioned, there was a lot of misinformation or half truths out there about what was happening, and just to, kind of sift through that stuff for everybody and give them the Cliff Notes version of, break it down and kind of maybe ease some tension a little bit. So, that's, I was just, as you were talking about that, I was just looking at the stocks I was following. There's very few that, there's a lot of red.
There was a lot of red today.
Mm-hmm. It looks like Home Depot's kind of been fairly steady.
Yeah. Home Depot is when it comes to consumption and inflation, like I felt when inflation was really starting to take off, that was kind of that was kind of an indicator to me that, holy cow, people are going to stop buying stuff to build on their house, or like, you know, they're going to stop remodeling, which is a huge amount of Home Depot's profits, right? So something I may get into one day is like retail. A big theme for retail is not so much inflation or lack of talking about another heavy topic, lack of consumption, but theft. Almost $1 billion in theft for Target this year. So it's pretty crazy, man. I don't know. Maybe we'll talk about that next week. Or I really want to get into this AI thing. You kind of got me like interested, because like I feel like with AI, and we'll get to the real estate real quick. The AI stuff is like, I know the stuff that is circumvents around AI and kind of creates that foundation for how AI is like created, but I don't know if there's enough public companies to invest in to really get a piece of that action, quote unquote. You know what I mean? It's kind of like, I feel like AI is, and I'm gonna say comic terms in a second, and the chat can blow me up on this. I feel like AI is like when Secret Wars is like gonna come out, like that's how far away it is. But there's characters that are in the MCU right now that are going to be part of that movie. And what I mean by that is like there's companies that are setting up the movie of AI to come to fruition. Anyway, so.
And if you're not into comics, now you think there's a secret war that's getting ready to happen in the future.
Exactly. And there is.
It's just a comic book reference. Don't worry.
Yeah. If you're not into comic books, then just don't mind us. Anyway. So West Coast, I kind of threw a curveball at you this week, not on purpose, but just kind of thinking how much land is worth over here, and kind of away, and like kind of what people are doing now is they're trying to buy land and then they want to permit it and like build a house or like something on that land. So this is not, now Prosser, Washington is not in Seattle. It's about 3 hours east, 2.5 hours east of Seattle. It's where my wife is from. Shout out if she's in the chat. And if relatives are in the chat, shout out to you guys. But Prosser is like kind of, it's a smaller version of Sonoma for us Seattle people. Her family's always talked about wanting to buy like some land in Prosser and then developing it and kind of having like all the families like, you know, go there every summer and like hang out for a week and stuff. And so we were kind of just messing around looking at like property over there, and 169 grand gets you 25 acres in Prosser, Washington, which I thought was a pretty good deal. Now, I don't know exactly where this is in Prosser. Prosser's a small town. However, it's not like, I think the population is like 10,000 maybe. It's a pretty small town. But 2.5 hours away from Seattle, you know, the pitch is, you know, come to Prosser and go to different wineries that you can walk to. It's a really fun little summer town. But yeah, 25 acres in Prosser, Washington. That's the only picture I could find that was like kind of worthwhile.
That sounds like a great deal, as long as there's not like a sewage plant or something on, you know, just outside the crop there. There's a sewage plant or something. It looks beautiful, and it looks like a really good deal.
And I think there's wifey right there. She says, yeah, Prosser. So
you knew that would draw her out of.
She's
sure.
very
hardcore Prosser fan right there.
Oh yeah, I love Prosser. I went to school on the east side of Washington. It's my school is in the city of Pullman, which is 2 hours east of Prosser. So I would have thought I would go back to the 509, which is the area code there. But Prosser's a fun little town, man. It's definitely like, we live in the suburbs, but it's still pretty busy here, and so it's always nice to go back home to Prosser and kind of relax with her relatives out there. It is what you see here. So it's really pretty out there.
Would y'all consider buying that?
I don't know, man. I mean, we kind of talked about, like, I think I wouldn't be opposed to it. I just don't know how much it would cost to like build on it, right? Because like, cool, you got the land, but you got to buy permits. You got to make sure there's not like wildlife, such and such. How many houses would you build on that kind of thing? So But I wouldn't be opposed to it. I would definitely like, I wouldn't mind taking a HELOC out, hint, hint, and then using the HELOC to buy some acreage out there. And worst case scenario is you buy it for 169 or whatever, 150 maybe, and then you just hold on to it for 4 or 5 years, and then you're like, oh shoot, I don't think I'm going to be able to do it, so I'm going to offer you $300K, and then you're out. So that kind of thing. So
yeah, it looks really nice.
Thanks, man. And what you got here?
So this is just $160,000 house. It's three, and it actually is fairly updated on the inside. Mm-hmm. But you get a 2-car garage.
Okay.
3 bedrooms, 2 baths, 1,250 square feet. It's an all brick home with a crawl space. I should have removed that large kitchen and island. They didn't have, it was built in 71. So they didn't do there was no open floor plan or anything. Everything was very segmented intentionally. But yeah, I just thought for that same price range, I just I was curious myself because I mean, I was talking to a guy in my office just last week, and he made a comment that really was interesting to me. He said, if you're selling something and it's got a 1 in the front, it's going to move. I mean, something under 200,000. I mean, it's just not out there, most, even here, that's an investor special. Usually, that price point is an investor special. So,
yeah,
you just don't see, but even, that would be a great house to, if you wanted to start your rental empire, buy that. And it's, it's, the schools are fair, they're decent. I mean, it's here, just like everywhere, location. That's the thing that drives prices. So, but yeah, I mean, it's a really nice, the houses built back then were like really nice, solid, sturdy brick homes, 1 story. So that appeals to a lot of people, first time home buyers, like newly married couples.
Right.
A great house to kind of start, kick your life off with, and not, hey, there you go, man. Let's we'll talk. I mentioned last week, Brian. I can say this now. I never said this on chat until Brian said it because it was his information. But Brian, is a prominent member of the comic book community, and he lives in New York. And somewhere along the way, I mentioned that I lived in South Carolina, or he saw it on my, maybe it was the SC Realtor YouTube channel that I have. But he said, so I've, you're from South Carolina. I've got relatives in Lexington. Do you know where that's at? And I said, well, I graduated from Lexington High School. So I'm from the same town. So we've gotten together several times when he's come down to visit his in-laws, and now I'm his realtor and I'm helping him relocate here. So it's really, really neat. But yeah, we'll talk, Brian. That would be great for your son.
And I had a question for you. So
Sure.
Like 160, and you said that was like kind of marketed for your rental empire, quote unquote. 2 questions. One, would you pitch this to a first-time home buyer that has like a family of 2 or 4, 4 total? Or and reason being is like on the mortgage side. So like if you are actually looking to buy a home and you're gonna get your starter home, quote unquote, I always say, well, that's great that you're trying to buy a starter home. However, you're qualified for this 4-bedroom home, and you guys are married and plan to have kids, because they had that conversation. I would rather you buy this home, because your starter home, like this quote unquote house, it's not going to appreciate by as much as so basically the point is like, get into that bigger home, because that bigger home is going to cost more down the road versus you get into your quote unquote starter home, where the starter home is not going to go up as much as like your family home. Do you know what I mean? You see what I mean?
Sure.
That makes sense. So as a realtor, do you guys have the kind of same kind of like analogy or concept when you're selling a client? And it looks sometimes like people can take it the wrong way. It's like, oh, he's just trying to upsell me. No, I'm just trying to save you from having to go through like the rigmarole of buying a house, you know, and staying there for 3 or 4 years and have to going through the whole process again. But now you have to sell your other home. It just adds more stress versus, you know what I mean? So
There's my my lender here in town, Kevin Cooper.
oh,
What's up,
cool.
Kevin? Thanks for stopping by, man.
Thanks, Kevin. Nice to meet you.
I it depends. So if that couple is renting, they, you know, they may see more competition at that bigger house than they would in a starter home. So I think there's some variables there that I would just have to weigh. It would be great for a single person who's renting.
Okay. Yeah.
You know, this actually would be like really good for a single person who's renting. You know, let's get you out of, you know, paying somebody else's mortgage and get you into you know, pay yourself. And, you know, down the road when you meet somebody and you get engaged and you start talking about building a family, then we'll move this one, or you could rent this one when you get to that point if you don't need it. So I think the good thing about a house like this is that it appeals to a lot of people. It's an potential investor house. Or if you've got an older couple who needs a one story to kind of navigate for health, then something like this would even be a decent house for them. So, but yeah, if they could swing it, I totally agree with your approach as well.
And my other question was, in South Carolina, is this a cash offer type house?
It could be, but it wouldn't necessarily have to be.
Gotcha.
Yeah.
Cool.
Yeah, we've got a buddy of mine in the office has somebody who's buying 100. Their max is 140,000. So that's really like finding a needle in a haystack.
It's a tough one.
Yeah.
Well,
but
cool,
I thought it was a cute house, 2-car garage. You know, that seems pretty. And I was just kind of trying to stay in that same price point. If given the choice, I would take the 25 acres. I really like that.
It's crazy, 25 acres. You know, and I, again, like I'm actually going back to Prosser in a couple of weeks. I should drive out there and just like actually see where it's at and see if it's like actually worth it. You know.
Well, if you bought it and subdivide it to family down the line or something, hey, you want 3 acres or you want 4 acres or, you know, whatever, just kind of start divvying it up. Y'all could have like your whole like a village of just relatives living on that 25 acres. Or if you want to get really savvy, put a bunch of build some tiny houses on it and make it like a mini Airbnb resort type thing, so people can stay there and then go to wine country and kind of make that like a a place where people can rent and stay and kind of head out.
I mean, that'd be really cool, you know, like to be able to do that. And like Prosser is like so the east side of, like, everyone from Seattle, they drive during the summertime, they all drive to the east side for the weekend. And so on the way back on Sunday, if you leave at like 10 o'clock or like 11, you are going to be in traffic on the way back home. And it's really bad. And now the fact that the work from home kind of like life, or just, you know, maybe not moving out to Prosser, but like I'll go to get my second home in Prosser or whatever city it is on the east side during the summertime. I'll work over there and that'll be my summer home type deal. It's being more attractive. So I just thought, man, like, because we were looking at a house for my mother-in-law, and it's insane. They're like 3.25 for like a 3-bedroom 2-bath in Prosser. And it's like, that doesn't seem right, you know, at 8% rates. And so I was like, well, I wonder what it looked like just to buy land. And the land is, I mean, it's pretty well priced in my opinion, you know? So, anyway, cool stuff, man. That was pretty fun.
Yeah. And that land could be anywhere, you know, that's, oh, there we go. I know what y'all are going to be talking about.
When she gets home in about half hour. Yeah, I know.
Yeah, Michael, that looks like every house in North and South Carolina from the 80s.
Oh, how funny. It did kind of remind me of like an 80s like house, like
Yeah.
Back to the Future type thing. So anyway. Credit tip of the day. Here's my credit tip of the day. Increase your credit line. So this isn't meaning to apply for a new credit card or to, take on more debt. This is simply like, and some companies automatically do this for you, but if you one of the 5 C's of credits or whatever is percentage. So what that means is, let's say you have a credit card limit of 5,000 and your balance is $3,000 for whatever reason. Maybe it's like a 0% interest rate, for 9 months. And so you're just carrying it over. Well, your credit score is going to get hit a little bit because your credit usage is over 30%. Well, if you call your credit card company and ask, hey, will you bump my credit card line up to whatever it can be maxed out to without hitting my credit report? Remember doing that as well. More than likely, if you have good credit, they will increase it, and it will increase your credit score by a couple points, just because the percentage of being used of the credit line is now less because your credit line has been increased. But yeah, just kind of like Kevin over here, I feel like we talked the same language for some reason. Just kidding. Yeah, but don't use it. Just increase it, and then tell all your friends how you increase your credit line without having to hit your credit and all that good stuff. Easy way. It's free, obviously. But yeah, make sure that some companies require to like see your credit as like a one hit. Don't do that if you want to increase your credit score. But yeah, just a kind of a small little tidbit. You guys may know that to do that in the chat, but some may not. And easy way to increase your credit score. What do you think about that, Brad?
Yeah, maybe if you've been with, had the same card for years, maybe that's an opportunity where they could do that and not have to pull your credit to. I mean, you've been a long-standing customer for 5 years, 10 years, whatever. You've got a good relationship with them, so maybe that's an opportunity to do that. I like that. I did not think about that, but you money folks, that's a good little trick there.
Yeah. Well, I didn't think of like doing Airbnb, and like I saw your wheels spinning with that 25 acres. So we learned from each other,
That's right.
I knew you would have liked that one too. I was like, I wonder what Brad's going to say about 25 acres.
I love it, man. I don't even need to see any more pictures. I want that view is so nice.
Yeah, it's cool. It's a pretty cool town. All right, Brad. All
right,
so let's do swimming pools. Go for it, man.
Yeah, so I was trying to think, on the heels of last week, I had so much fun doing the research for the solar panels, and I tried to think about, and I think maybe that might be the focus of the more at least until I run out of things to do like this. But on the heels of that, I was like, well, what are other things that people talk about doing that they think that, oh, well, if I spend $10,000, I should get $10,000 back.
Right.
That's the general public's mindset on doing these updates, and I can tell you generally it's not typically a dollar for dollar improvement or value. It doesn't increase the value of your home on a dollar to dollar basis. So I thought swimming pools was something that we can take advantage of these for 10 months out of the year, probably around here. So a lot of people look to do it, and a lot of people look to do it even in neighborhoods that have a community pool.
Oh,
so then you have the privacy of your, a lot of people having, you go to the pool and there's 50 people there.
Yeah.
They would prefer to have, have their own. So here it's a pretty popular thing. So does a swimming pool increase the value of your home? So I've just got a list of pros here. We got a kid splashing around in the pool, enjoying the summer here in the South. Everyone seems to love a pool. They like the idea of a pool. So these are just a list of pros. Pools offer, this is something I didn't think about, but pools offer physical and mental health benefits. So, go for, I know before you went on your trip, you were doing a fair amount of swimming, right?
Yeah, it turned into like, oh my God, I got a double chin. I got to get rid of this double chin. And I was playing like basketball with like somebody, and I was like, oh my God, I'm out of breath. And so I was like, sunny outside. It's a good way to get out of the house. And so I was swimming like, I'm actually going back tomorrow. I just haven't been able to catch up. But yeah, I was swimming about an hour and a half or an hour a day, getting 50 laps in. And I lost about 11 pounds.
Wow.
Doing it. I did some weight stuff too, but yeah, no, and definitely I didn't think of the mental health benefits though, but like literally, like, yeah, it was kind of like my, you're swimming, and so you don't hear anything when you're swimming, right? Your ears are kind of plugged up a little bit,
Right.
so it's definitely like an escape.
Sure.
Greatest way to be healthy, in my opinion. So
Yeah.
yeah,
Use a lot of muscles you didn't know you had too.
exactly.
So,
Yeah, good for back pain.
Yeah. So your pool can increase curb appeal. I noticed a lot of listings here that have pools. That's usually their first picture is the backyard with the pool.
Oh, okay.
And it kind of sets the tone for the rest of the photos. So, apparently people who list houses with pools assume that the potential buyer is going to, that's an added benefit.
Okay.
And I should have deleted those bottom two. That's from the add value to the home, and the tax incentive was from that's from the solar panel thing. So those two do not it might add value to the home. That's what we're looking at, but there is no tax incentive for having a pool, unfortunately. Next, go ahead.
Real quick, just a question. Is there differences between an outdoor pool versus an indoor pool adding value?
We really don't see indoor pools here.
Oh, okay.
Yeah, it's mostly because of the weather.
Yeah.
A lot of pools here will have a really whatever the paved area or the area around the pool on the exterior. Those are usually pretty wide so that you can put tables with umbrellas and chairs, lounge chairs. And so they're all I may have seen one or two houses in 10 years that has had an indoor pool.
Oh, yeah. They're pretty prevalent here, obviously.
I could imagine that would, because I was going to ask you, do y'all like swim in the rain or something? What's the
Yeah, there's some people that actually do that. Yeah, but there's a lot of like indoor pool. Like there's one outdoor pool and it shuts down like in October. But a lot of the pools that like I learned how to swim, they're all indoor. And then like friends here had like an indoor pool, but the roof was like one of those like you do like this, you know what I mean?
Like retractable or something.
Yeah, it was an old funky kind of like system, but yeah, the majority of them are all indoor for sure.
So Kevin's got an interesting comment there. So the county that he lives, they raised the tax value of his home by 60%.
Wow, that is crazy.
Yeah, that's so there's not a tax incentive, there's a tax liability. In some cases, I guess. And they've been pretty aggressive in reassessing because they feel like they're leaving money on the table because they haven't done it in so long.
Yeah.
The Trey's in the chat. Hey Trey, what's up, man?
Oh wow, what's up, Trey?
Hope you're doing well, buddy. The cons of swimming pool. Installation is expensive. And I'll talk about that on the next slide a little bit, kind of give a price range.
Okay.
Something you don't think about, potential safety issues of having a pool. You may need more insurance, and that's kind of off the heels of that. You may need more insurance from it for having it. And the never-ending maintenance. of a pool. And Kevin, Kevin, if you don't mind commenting, what would you estimate that you guys pay? I've had the pleasure of hanging out at Kevin's house, and he has got I think he said 15 acres. House built on 15 acres with a pool and a really nice like outdoor outdoor area. We sat out and watched a baseball game and smoked cigars and drank bourbon and stuff. But he's got a beautiful, beautiful view. What would you say Kevin? What would you say you spend annually on pool maintenance?
Jeez.
I'm just curious. There were the numbers that I saw were kind of all over the board, but that's part of the upkeep that I think people may fall in love with the idea of having a pool and not. I've heard filtering pool water costs like.
Wow, really?
Wow.
It's HOAs.
Huh. Wow.
And I don't know if I don't want to mess your slides up here, but
no, it's good. No, I like this.
Do appraisers add value to homes?
They will, and I'll
Okay.
touch on that a bit.
Okay.
About $600 a year, Kevin says. $600 a year for maintenance.
And then I know, like, from an appraiser standpoint, like here, it doesn't happen very often, but if you don't have like guardrails around the pool to like prevent people from like, drowning, they will not approve the appraisal. You have to put in guardrails of some sort.
I don't think we have. That's not required here.
Oh, okay.
Yeah, that's not required here.
It's required here for sure. Because I know that's not killed a couple deals, but it's delayed a few because they just didn't know. But and I see them all the time around the very few pools that I've been to, like recently. Like they always have guardrails around the pool. So
great tip there, Trey. Just have friends with boats and pools and skip the ownership yourself. And so Kevin's got a saltwater system. So Kevin has a saltwater system, and they're less maintenance. So that's and I don't know what the cost. So the other question would be, what's the cost to convert a chlorine pool to a saltwater pool to save on that maintenance? All right. So my hot take is maybe. So according to so I think it boils down to what your personal enjoyment is, and also understanding where things sit. So according to Forbes, the cost of an in-ground pool could typically run anywhere between $28,000 and $55,000 to install. Wow. The average return is around 7%. So just because you spend $35,000 on a pool doesn't mean you're gonna, my house is worth this, so I'm gonna add $35,000, and then you might get 10 for it, or so it could be considerably less. But as long as you understand that you're not getting a dollar for dollar, I think once you get to that point, you have to put a price on the enjoyment of your family. We spent 5 years here enjoying the pool. There's some cost to associated with that. So if your goal is increased home enjoyment, neighborhood socialization, and exercise, a pool may be a great fit. But if you're looking for a home improvement project that will boost your equity and doesn't come with ongoing costs, take a pass on the pool. So what do you think about that?
No, man, I personally, like, I would never buy a pool. Like, if I were like looking at a new house, I would not want to buy a pool, period. Just because of I wouldn't get the full usage out of it. However, and it just, it takes up the whole yard, most times, right? So like you just have a pool and that's kind of it. But the value proposition of it, it's fascinating to see, like, because a lot of times you never hear someone like, oh, did you know that so-and-so is going to build a pool? And then like, the neighborhood kids come around, they like wait for the pool to get done and da-da-da-da. You don't really see that. I haven't seen that kind of anticipation for something, gosh, since I was like a little kid, and I've lived in this town my whole life. So I feel like the trend, and not just maybe Washington, or maybe specifically here in Washington, is that like there's not so much community as much anymore. Like you can't really knock on your neighbor's door. You know, it's a little awkward, right? Versus like 20, 25 years ago, to where, you know, there was a pool actually down the street from us, and it was the neighborhood pool. Everyone would come over and like swim in that pool. Um, I don't see it as in Washington as kind of like an added value approach to people, and in most cases it's like, oh gosh, I don't want to deal with a pool. I'd rather fill it up if I'm going to buy this house. But it's I know appraisers do add value if you do have a pool to the home, but usually it's like 10 to 15,000 maybe, depending on the size of the pool. I would just feel that like, man, paying like, you know, the maintenance cost would just scare me. Like, you know, you have to get it fixed. It's not like you can.
Pump goes out. You know, if the pump goes out, how much
goes out?
Yeah.
Yeah. I know pools that are part of HOAs with condos. Like usually clients for me, like they don't want it. They don't want to have a condo with a pool in it. So it's a regional thing, I think, more so than anything. But they are fun, and I really did enjoy my friends that did have indoor pools, and we go over there like on a birthday, like that's for sure. So
I think probably here more than neighborhood socialization is, you know, you and your wife have kids, you've got a pool, you invite your best friends over with their kids, and you grill out and you hang out at the pool and you just make like a day of it. It's I think it's more here, it's more like that, you know, not so much like a neighborhood thing, but more, you know, hey, I'm going to hang out with my buddies and drink beer and grill out and, you know, just have a good time hanging out with them.
I see a lot more people living on like big acreage, and they'd get those like $300 pools on Amazon, you know, and fill them up with a hose. I see that more than like actual pools here. Those ones that kind of stand up like 5 or 6 feet, but they're not big, you know. It's just more cool off type of thing. But this is really good stuff. I mean, I don't know as my experiences with pools and whatnot is more of the like, oh, we have to fix it, or like I remember one client was trying to buy a house with a pool and it was unfinished, and so he wanted a construction loan. So the house was just like a mess. There had to be all these different things. Like there was safety issues. There was lack of stairs issues. It was pretty much like halfway done house. So that was a really tough loan to do. We actually ended up denying that loan. But yeah, no, good stuff, man. I really
where do you swim when you swim? Where do you go?
There's a community pool that I pay like $5 to swim at. It's like down the street, but it's outdoor. And then during the wintertime, I'll probably transfer over to like a LA Fitness or something like that has a pool. There's not a lot of gyms here that have pools at them either, which is kind of unfortunate because like there's a lot of swimmers here that swim on lakes and all that. But yeah, we have a pool that's outdoor, and it's pretty nice. I like it. Yeah,
that's cool. So, yes, we'll probably try and do stuff like that, you know, and figure out what the next line of thing. And like you mentioned, how do you find the next multi-bagger stock? What do they have in common?
I mean, that's a great question. I'll try and answer it as best from experience as I can. Okay, obviously, like it takes a lot to get a stock from 1 trillion to 1.3 trillion. It's either a new product or taking over of a sector, what have you. The easiest way to get, and I don't know what your definition of a bagger is, quote unquote, but like let's say a stock from 10 to 50 in a short period of time. The easiest way to, I guess, foresee that is to just go to the mall and see what see what a certain sector of consumers are buying. So like when I was a kid, and I said this on past shows, like Pokemon was hot. We put something up at Toys R Us on Tuesday, and it was gone by Tuesday afternoon, right? And so I kind of figured out that Pokemon was the big thing. This new dumb like little like thing was the new thing, right? And so I figured out who was making money off of each Pokemon whatever that was being sold. I was 17 years old, by the way, when this was happening. And so I found the distributor of Pokemon Unlimited or whatever. So this company called Kid Entertainment got 25 cents for every dollar of Pokemon product that was sold in the US. I bought the stock for $11. 9 months later, it goes to 110, sold at 92. So I guess just being aware of just like new trends is the easiest way to do it. If you know, like a sector, or you assume a sector is going to blow up, like I think during the pandemic, like EV was really big. There was all these different EV companies coming out. That's where you're going to find those multi-baggers or those times 10 returns on investment. It's really hard to do it in biotech because you really have to like have a scientific degree or understand how amoebas work, I guess. And it's not, you just have to look at trends. Like in any, like in sports, you look at trends. In comics, you look at trends. Whatever new hobby is hot, or whatever like new app is like if a company is developed some new game that every 7-year-old plays, find out what that game is. And if that stock's trading at like $10 a share and 90% of their revenue is this brand new game that has 300 new downloads, buy that stock. That's where you're going to find those multi-baggers, quote unquote. And that'll move quick, right? So that's
really interesting.
And
you have that's been the basis of everything you've talked about since you watching your niece, talking to your nephews, like seeing what what they're into and what they like to do.
And you too, Brad. I mean, like you've also mentioned like your relationship with your nephews is the reason you got back into comics. Well, I gotta assume that you're probably watching what type of like comic books they were like reading, or like what kind of stuff they're into. So like literally, I mean, like I think it's a good way to interact with like younger generations too, is like the growth for just stuff in general is ages 14 to 24, in my opinion. 10's a little young because like they're not really consuming at a vigorous rate. But like when you're 14, like you're getting like your birthday money is going from like $30 to maybe like 50 or to 100, right? And so you're getting more money and you're being more aware of like just stuff, and you're trying to build an image for yourself, right? And so like I just think at that age, what you're consuming, it's like multiplied more so than, and you don't really care what you spend your money on, right? You'll mow lawns to get that new video game. You know what I mean? So it's like, yeah, just be aware of like what kids are doing, like, and don't hate on it. Lululemon was like a dumb yoga pants company, and every girl in college wanted a pair of those leggings because they made them look good, right? So that was another stock that I got into at like $80 a share. It sold at like 220. Stupid freaking pants, man. Like pants are pants, but every chick wanted them, man, and every boyfriend got 8 pairs for their girlfriend. You know what I mean? So just look out for trends. That's my best advice.
Very, very perceptive, which is a great segue for the quote. No one wins the Super Bowl accidentally. Be intentional. Be passionate. Don't mail it in. You got this. So I think that's a great tip for what you just said there, Ferg. Cool. Be intentional and be passionate. It doesn't happen by accident, for sure. And thanks to everybody who joined us live in the chat. Thank you. If you're watching on the rewind, thank you so much. If you wouldn't mind, click the like button, the thumbs up, subscribe. We would love to, send you. You can click the bell, and you'll get a notification each Wednesday to remind you about the show. But every week it's like this. We've got interaction like this, and it's really nice. We like that. Keep us on our toes a little bit.
Yeah, and the questions are awesome today. I mean, like, I like this type of question because it's not like I need a stock to get me a 5-bagger. The question that NASCAR All Out asks is, how do you find, like, what stuff do you look for to get that big bagger? Because, like, I'm just gonna assume NASCAR All Out probably knows a lot about NASCAR. I don't know, I know crap about NASCAR, but if there was something growing in NASCAR, like a new drink or like a new like sponsorship that was on like every single car, I'd look into it, just stuff like that. But that's a great question, man. It's broad enough for me to answer it for you, and to the point where, like, it gives you a little bit of homework to do too, right? And I think
What's
you
the
don't.
whole like, you know, providing someone with something as opposed to teaching them how to do it. You
Yeah,
know, you don't
exactly.
you don't see that. I would much rather learn how to do it myself. And yeah, show me the step 1, step 2, step 3. This is how you do it.
Yeah.
And yeah, that's an excellent question. I appreciate you guys. So we say it every week, but we do love interacting with the chat, and we appreciate your questions. You guys are awesome, and this is a lot of fun.
Yeah, man. And your segments with like the adding value to homes, or like if it doesn't or it doesn't, like, I think it's a really good thing to think about. That, I only see it with clients every so often, but like I'll use that information if I ever get that question, right? To kind of like take into consideration, like, hey, Ferg, should I get this, this pool in my house? I'm like, oh, actually, like, we talked about that last week on our show. And from what Brad said, maybe, and I think a lot of times when you're buying real estate, and Kevin probably knows this as well, it's not just buying an investment, right? I mean, you should approach it that way, but I think 50% of it also is like I get this question all the time. When do I know, when it's the right house? I'm like, well, typically you should probably have that conversation with your realtor. But like for me, you just kind of know. It's a gut feeling. And, it's the most important decision you'll ever make in financially, hopefully. And yeah, Michael, so no pools or solar panels.
I'm sorry, man. I'm
Yeah.
sorry. Um, yeah,
No,
if
it's
if
funny.
you guys have if you're thinking about doing, I mean, this leads into a whole nother opportunity here. But if you're thinking about doing certain updates to your, that's something. If you live in North Carolina or Oklahoma or Texas or Maine, those are the kind of questions I can answer. I may not know how your real estate, what's happening in the real estate world where you live, but those are things that I can chime in on. So if you have questions about, my wife wants to do this, I'm a little hesitant, what do you think? That's the kind of stuff I want to see. And Michael, I didn't say no pools. just
maybe.
wait. You got to weigh it though. You got to
Yeah.
weigh it. It's a
Yeah.
maybe. It's a hard maybe.
Yeah. And again, it's like one of those like home decisions you have to make, not so much financial. I mean, if you can afford it, right? And that's what it kind of sounds like to me. It's more of like a home decision type of thing, right? So
Yeah.
good stuff, man.
Yeah.
Well,
Awesome.
That's our show for this week. I promise we'll get an AI show one of these weeks. And I'm again, awesome questions. Like there's no such thing as a dumb question. The worst question you can ask is not asking a question at all. And it also helps, I think, us kind of figure out what you guys are thinking, and hopefully helps us come up with good topics to talk about that you guys may have questions about. So appreciate it, Brad. Appreciate it, chat. We will see you guys next week.